if you wanted to spend money to go shopping, you needed to make the decision to go to the family and, or whole family into the car, get everyone ready, go to the shops, have a look around, see what you like, try a couple of different things, and then make a decision to spend money. Now, all of a sudden...
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics such as investing, cash flow, budgeting, saving, passive income, debt management, and much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are back again and back talking about a very topical conversation. Like this is everywhere at the moment.
Andrew, I don't know what's been going on, but the titles that you're coming up with when you're putting these things together, this is fantastic. You know what this is? The financial middle class squeeze. Earn more, feel poorer.
I'm getting more creative, Billy.
You definitely.
It only took me 221 episodes.
Andrew, what are we talking about? This is a huge thing, probably not being described as how you've described it, but what are we talking to everybody about today?
I earn more, but I feel poorer.
I guess that's it in a nutshell. Episode over. Thanks, everyone.
I mean, this is something that we see all of the time, and I think that it's probably it's more on our clients' lips than it ever has been in the past. Bills, what is it? Why is it? What's happening? What's going on?
Yeah, I mean, look, income, when you look at incomes and income growth in particular, yes, we're earning more money, and that's just a natural progression of economies growing and, countries developing and things. So the average national wage seems to go up each and every year as it does. But things are getting more expensive, and it's not necessarily the discretionary items that you could make a choice on and say, okay, look, I know if we go out for dinner, it's going to cost us X because we're going to have an entree, we're going to have a main, we're probably going to have a few drinks. So you know what? We're not going to do that. Or if we do go out, we might skip the entrees, hit up the mains. And it's not just those discretionary items where you have the choice whether you spend it or not. It's everything. Everything has gone up. And that's, probably a couple of things. Let's call it inflation. Let's call it very, very poor financial management from the Labor government that's in power now. Let's call it the growing sector of the public sector and how they're introducing more jobs, and obviously the immigration numbers that are coming into Australia as well too. So everything is getting more and more expensive, and people are feeling the squeeze, and it's really difficult to try and get any respite from it because it is absolutely everywhere. And at time of recording, actually by the time we publish this and stuff, the RBA would have announced their decision. It might have been a week or two ago, depending on the publishing schedule. But there is talk of the rate rise going up in February at their meeting in Feb.
And I mean, look, it's from probably a combination of a few things. I mean, one, you can chalk it up to post-COVID inflation, large inflation rate, and everything's become more expensive. But I don't think it's quite as simple as that.
Yeah.
I think that in addition to, the cost of everything going up, the need for someone to be more prudent with how they manage their money it's exponentially more difficult. And I think that not to, and that's not what I'm trying to do here. Not to say, big bad business, they're forcing us to spend more money. But I think that businesses and marketers have become smarter on how they get you to spend money without necessarily knowing.
Mm-hmm.
And let me give you an example. I mean, look, one, you've got your subscriptions that, previously you had, 4 channels that you could watch on TV, and what was on was what we could watch. Now there's, 400 different streaming services and, 400 direct debits that are coming out of your account, which seems small when you start, and all of a sudden it's snowball.
Yep.
But you think about the decision around, dinner, right?
Yep.
Previously, you went out to dinner, you maybe got an entree, you probably got a main, and, that was, or maybe there was a dessert that some people would share, and that was it. Nowadays, the way that you go to dinner is you go to seating time, right? And, maybe I'm just complaining here because this is Melbourne, but all right, you're now not going to dinner at 7 o'clock, spending the night there, and, you average that cost over the course of, 4 or 5 hours. Now it's, all right, you got a 2 hour seating and it's from, 8 o'clock till 10 o'clock. Yep. Because I want to get another seating in from, 5 till 7. So, dinner's at 8 o'clock. We'll go for drinks beforehand. Cool. Now all of a sudden you've gone for drinks. You've maybe gotten a couple of little entrees while you're there at drinks, and you've gone to a restaurant. And now all of a sudden it's not, each person gets just a main and maybe a dessert or an entree and a main. Now it's we're going to get share plates. And now when you're going to get, 10 different little share plates, and all of a sudden, that's going to average out into, maybe one main meal for, a bunch of people. And the ability to spend money over the course of a night out has exponentially gone up. Same thing as shopping. Previously, if you wanted to spend money to go shopping, you needed to make the decision to, to go to the family and, whole family into the car, get everyone ready, go to the shops, have a look around, see what you like, try a couple of different things, and then make a decision to spend money. Now, all of a sudden, I just spent $100 on, a shirt because it's right at the tip of your fingers, and the cost of convenience comes at a financial cost. And I think what has also happened is, while it's become easier to spend money, people have not become smarter in stopping the expenditure.
Yeah, look, really good point. I mean, I was going to talk about lifestyle creep in terms of things just get more expensive, childcare, private health. If you're doing better and you're earning more money, you tend to consume more. That's just the phenomenon with economics. But what you're describing is a symptom of that. But what happens is that becomes your new normal, right? So your baseline of how much it costs to run your household, turn the lights on, so to speak, continuously increases, and then going, oh, shit, we're in trouble. I need to turn something off, or I need to do something different. It's really hard to walk that position back because that's become your new normal, and the level of, call it comfort, that you experience and that you feel, it's very difficult to walk that back. And you're absolutely right. There's a lot of very, very smart people out there in business that are designed to get you to spend more and more money. And, if you think about, say, a telephone, I'm using an Apple and I always have and stuff like that. But one of these things probably costs, I don't even know, $1,500 or something, maybe a little bit more, $2,000, depending on the memory and stuff. But everybody that I know, most people who have got an Apple, they're within the last couple of new versions have come out. So that's like $1,500 that people are spending, or $2,000 that people are spending every 2 or 3 years, not to get a new phone, not to replace it because it's broken. It's just to upgrade to the new one. That's the symptom of exactly what I'm talking about. That becomes a new normal. And then when Apple release their new product, it's like, oh, I want to get the new iPhone because, it's a few millimeters bigger or whatever it is, right? It's absolutely insane. And what it does do is it's a really big squeeze on the middle class, because the two other ends of that spectrum, if you're upper class, then it doesn't make a difference. You probably don't feel it anyway. If you're lower class, then you don't have these options to be able to make that decision, whereas middle class are the ones that feel that squeeze.
Yeah, absolutely right. And I think housing cost is another one that massively factors into it.
Yep.
Especially when you consider, I mean, look, a rising cost of property, obviously, there's a larger function or a larger amount of your budget comes out, purely just for mortgage or rent, because even the cost of rent has risen astronomically over the course of the last few years. So that's a cost that you have to incur. And as the cost starts to increase, what happens is you feel like, I grew up in a particular area, this is where I was raised. I'm not, by purchasing a property or by renting a property in that same area, theoretically, I'm not changing my lifestyle. All that I'm doing is just matching the lifestyle that I grew up in. I'm keeping things equal, but in actuality, as the price has risen, you're now spending more in order to achieve that same level of lifestyle. And, once again, the middle class is feeling the impact and feeling the effect of that. The housing cost is massively factoring into it. And you consider population growth and how much immigration, both immigration outside of Australia coming into Australia, and we're Victorian based, but you also consider the net migration of people from other states returning to Victoria. I think housing cost is only going to become a much bigger issue, rather than something that's going to dissipate and we're going to, solve for it, because the rate of production of houses is absolutely nowhere near where it needs to be in order to keep the cost even. So the likelihood that that's going to reverse anytime soon is, I think, as close to zero as it could be.
Good opportunity here for me to beat up on the government. Tax is the next one.
Yeah.
Right? So if you think about it, and we can talk about bracket creep and what have you. So whenever you earn more money, it feels unwarranted because you could get pushed into the next tax bracket and stuff. But let's just make this really simple, just for the sake of the exercise. I'm going to say we're too highly taxed in this country. And if you think about somebody, and I just used a 30% tax rate, right? Said you work 8 hours a day, you multiply that by 0.3, because whatever you earned that day, 30% goes to the tax person. Essentially, say you work 9 to 5, you get to 11:30, so you've worked from 9 till 11:30 just for the government. Let's say it's 12 o'clock, simply because it's nicer and it's more round, but you pay GST and what have you. So there's a little bit more to it. But my point being is you've gone and worked, the first chunk of your day, and it's not even for you. We're taxed far too much in this country, and it hurts. Once again, talking about the middle class, it makes a huge difference because it doesn't matter sort of what you do, it's how much you've got to then be able to live your life and do those things. And if you're giving a large chunk away through, we're talking about income tax, but then you're talking about, let's be honest, GST on pretty much everything,
Right.
fuel excise, payroll tax if you're a business, capital gains tax if you sell an asset. The list just goes on and on and on. And, it's at what point do you, as a government, do you look at it and go, hang on a sec, we can't keep tapping that well in order to try and make our books balance, even though they're not making them balance, but can't we think of something more creative other than, tapping our citizens? And we get the privilege of saying this in Australia because the truth is we've got the natural resources to be able to support the country. If you look at other countries that have natural resources and they're diverting those to like a sovereign fund, the whole country benefits from it. We've got it completely backwards here, and we're stuck on the drug that is taxing the population.
Yeah, absolutely. Social comparison. I think that's another massive one. Previous generations, the people around you that you could physically see are the people that you can compare yourself against. And, you look across the street and maybe one person has gotten a new car, and you look, across the office and maybe, one person has gotten a new suit or a nice watch or a piece of jewelry. Now, with Instagram, social media, your baseline has shifted completely because apparently everyone is driving Bugattis. Apparently everyone is living in a $4 million mansion.
Flying in private jets.
Yeah, everyone's flying in a private jet. And the baseline of comparison has now shifted, and you're no longer looking at someone who is actually in a similar life stage as you and experiencing similar things to you. You're now looking at someone who is halfway across the world, paying a different tax rate, earning a different income. 95% of the time it isn't even real. They're, fake or have rented a plane for the sake of an image, or like the baseline of comparison has become so distorted that you can't keep up.
Yeah.
It is physically impossible to keep up.
We'll call that the Kardashian/Zuckerberg effect, because I think that's exactly right. And it's very, very easy to compare yourself in those scenarios. And it looks like everybody on social media is having the time of their lives and spending endless amounts of money, right? So I get it. And if you can refrain from that, I think that's a very positive position to be in. Andrew, wrapping it up, look,
Not to have a whinge, like, what do we do about it?
well, look, I think ultimately it's a matter of getting advice from somebody. Stop optimizing your lifestyle and always chasing this hit, whether it's the dopamine hit by buying something online, whether it's looking at, Instagram and looking at that person and seeing the lifestyle that they've got, and start protecting and prioritizing flexibility. I really think that's it's easier said than done, but if you engage with a professional and get some advice, that will make such a big difference for you. And it's not designed, like what we're talking about, it's not designed to spend less money for the sake of it. It's to prioritize optionality, in case interest rates go up, in case income drops down, in case life changes. Having flexibility is the ultimate flex, because it gives you that choice. When things happen, you can make a decision on what you do and how you respond to it.
Absolutely. Having a cash flow strategy, having a budget, and a means to be able to adhere to it is the only thing that you can do to be able to combat this. Because if you're taking it ad hoc, and if you're taking it, when I earn more money, everything's going to be fine, you're setting yourself up for failure.
Yep. Andrew, well said, well summarized. To our listeners and our viewers, hopefully you got a whole heap of value out of that. Andrew, thank you for today as always.
Thanks, Bills. Always a pleasure jumping on the audio waves. And if you've got any questions or you want to reach out to Billy or I, details are in the show notes. Please like, subscribe, and we look forward to catching you on the next one.
Thanks.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
The information in this podcast is general in nature and does not take into account your personal objectives, financial situation, or needs. It is not financial, legal, or tax advice and should not be relied upon as such. You should consider whether the information is appropriate to your circumstances and seek professional advice before acting on any of the information provided. Past performance is not a reliable indicator of future performance. This information is provided by Billy Amiridis and Andrew Nicolaou of 360 Financial Strategists Pty Ltd, authorized representatives and credit representatives of Akumin Financial Planning Pty Ltd.